Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello everyone, this is Yazad and I'm so glad you're here today. In today's video, we are going to be talking about the Vedant Fashions IPO and the key things to know before you invest. For us Indians, tradition has always been a valued possession. Vedant Fashions Manyavar is a brand that has made a significant reputation for itself in the men's traditional wear category in India owing to large advertising campaigns. From casting Virat Kohli to roping in celebrities like Amitabh Bachchan, Alia Bhatt, Ranveer Singh, Manyavar has deeply imprinted its presence as a mass brand in the hearts and minds of people. Vedant Fashions, the owner of the ethnic clothing labels including Manyavar and Mohey, is all set to enter the primary markets on 4th February. Let's take a brief look at the company. Vedant Fashions caters to the Indian celebration wear market with a diverse portfolio of brands. Now, the company offers a one-stop destination with a wide spectrum of product offerings for every celebrity occasion to its customers. The company's brands include Manyavar, Mohey, Mebaz, Manthan, and Twamev. For the financial year 2020, Vedant Fashions was the largest company in India in the men's Indian wedding and celebration wear segment in terms of revenue, operating profit before depreciation, interest and tax, and profit after tax. The company operates its business through franchisee-owned exclusive brand outlets, with the remaining by multi-brand outlets, large format stores, and online platforms, including its website and mobile application. As of 30th September 2021, the company had a retail footprint of 1.2 million square feet, covering 535 exclusive brand outlets spanning 212 cities and towns in India. Also, it had 11 exclusive brand outlets overseas in the United States, Canada, and the UAE. The firm aims to double its national footprint over the next few years. Let's take a quick look at the financials. The company has had a positive track record of profits in the past. In financial year 2021, Vedant Fashions has reported a revenue of 630 crores and a profit of 130 crore rupees. However, it reported negative growth in revenues and net profit due to lockdowns and limited cost absorption. On the other hand, the first half of the financial year 2022 has shown significantly improved traction. In the September 2021 quarter, the company reported a net profit of 98.4 crores against a net loss of 17.6 crore rupees in the same period last year due to the second wave of COVID-19. Now, Vedant Fashions is growing through different brands. The company is fueling its growth through different brands. Through their brands Twamev and Manthan, they are focusing on increasing their leading position in the organized Indian wedding and festival wear industry and establishing supremacy in the premium and value segment of the men's Indian wedding and celebration wear market respectively. Through their brand Mohey, which was founded in 2015, they have entered the women's Indian wedding and celebration wear industry as well. They have a wide portfolio of leading and unique brands, namely Mebaz, a regional legacy brand serving the complete family with a long tradition and strong footprint in the states of Andhra Pradesh and Telangana, which they acquired in the financial year 2018. India's ethnic wear. According to a report, the market for ethnic men's and women's wear is valued at Rs 1.5 trillion. Now, the organized category is valued at 170 to 180 billion. And in the organized segment, about 40% of the market belongs to brands in the value segment. 30% is commanded by premium brands and 30% by luxury brands. Now, the organized part of ethnic wear market was growing at 20 to 25% between 2015 and 2019. But in 2020, it was hit badly by COVID-19 and declined by 30 to 35%. It's expected the market will bounce back and grow by 20% in the next 4 to 5 years. Now, this bodes well for the company. However, retail giants like Reliance Retail, Tata Group's Taneira, and Aditya Birla Fashion are also planning to expand their footprint in the ethnic wear market in the coming years. Now let us take a look at the IPO details. Vedant Fashions has fixed its price band at Rs 824 to 866 for its public offer. The IPO opens on the 4th of February and closes on the 8th. The shares would be credited to your demat account on the 15th. And the listing date is 16th February. The minimum lot size is of 17 shares, and at the upper end of the price band, the issue is expected to fetch Rs 3,149 crores. Up to 50% of the net issue is reserved for qualified institutional buyers, whereas non-institutional buyers will have 15% shares allocated for them. The retail portion has been fixed at 35% of the net offer. Retail investors can invest a minimum of 14,772 rupees for one lot, and their maximum investment would be Rs 191,386 for 13 lots. Vedant Fashions IPO will not consist of a fresh issue of equity shares, but will only be an offer for sale or OFS. Shares will be sold by existing shareholders of the company. The promoters of the company are Ravi Modi, Shilpi Modi, and the Ravi Modi Family Trust. So what are some of the key strengths and weaknesses of the company? Let's look at the competitive strengths. It's a market leader in the Indian celebration wear market with a diverse portfolio of brands catering to the aspirations of the entire family. Large and growing Indian wedding and celebration wear market driven by an increased spending on such wear. Differentiated business model combining the strengths of retailing with branded consumer play. An omni-channel network with the integration of offline and online channels. And finally, an experienced and professional founder-led leadership team. Some of the key risks. The COVID-19 pandemic or any future pandemic or widespread public health emergency could adversely affect business, results of operations, financial condition, and cash flows. The company's business is highly concentrated on Indian wedding and celebration wear and vulnerable to variations in demand as well as changes in consumer preferences which could have an adverse effect on the business. A significant portion of the sales of their customers are by franchisee-owned exclusive brand outlets. An inability to maintain, renew, or enhance relationships with franchisees could adversely affect business. Other than designing of the products, they rely on outsourcing a significant proportion of production processes and activities to third parties without exclusivity arrangements. Pricing pressure from competitors may affect their ability to maintain or increase product prices and in turn revenue from product sales, gross margin and profitability. This may materially and adversely affect financial conditions and operations. So what can we expect from the IPO? Now, as the IPO is entirely an OFS, the company will not receive any products from the public issue. Now, this doesn't excite me personally, as when funds are raised by a fresh issuance, it is additional capital for the company, which is likely to spur economic activity and contribute to employment, production and growth of the company. But an amount raised through OFS will most likely go into the hands of existing shareholders, in this case the promoters, which may or may not flow back for further investment. Now, it wouldn't surprise me if there are no significant listing gains. With the high valuations and the price that the company is issuing shares at, it doesn't seem to leave much scope for investors to make a lot of money on listing. For a low-risk investor like me, maybe it would be better to avoid this issue. Having said that, please note that the purpose of this video is not to recommend whether one should subscribe to this IPO or not. You must always make your own investment decisions based on your personal circumstances. So what is the ideal IPO strategy to follow? The IPO pipeline for the year 2022 looks solid. Several companies have received approval from the market regulator to go ahead with their IPO plans. Now, these names include Delivery, Go Airlines, Emcure Pharmaceuticals, Fusion Microfinance, MobiKwik, among others. Before investing in any of these firms, investors should avoid getting caught up in the hype and instead examine prices and fundamentals. Now, if you recall, due to high valuations, Omicron fears, and tightening by the US Federal Reserve, the market did become turbulent in the last quarter of 2021, losing more than 11% from the record highs. Paytm, Metro Brands, Star Health, RateGain Travel and Shriram Properties all failed to impress investors due to excessive valuations, earning instability and COVID-related worries. As companies line up to raise funds from the market amid high valuations, investors need to consider many factors before investing their money in an IPO. Now, if you are investing in an IPO, weigh in all the positive and negative factors affecting the company. Take a close look at the company's financials and valuations. It would give you a clear picture of what is brewing. That is all for this week. Happy investing. Stay safe. Goodbye.